What's going on, YouTube family? Today we're going to be talking about what happens when banks stop issuing auto loans. Now, a few months ago, I made a video talking about all the hypotheticals of what happens when banks stop issuing auto loans and how it affects the other lending sectors, but today it's actually coming to fruition. Now, the reason why this happens is because banks experience a traumatic loss, whether it's due to too many repos, too many delinquencies, too many deficiencies when they take the cars to the auctions and wind up losing money because they owe more than what they actually sold them for, and also increased risk. Now, there were a lot of factors that came into this, so I'm going to explain how this affects you, regular people, especially small business owners, and how this is going to affect the overall lending industry. Now, to make this simple, I'm going to be talking about two types of lenders. We have your big banks like Wells Fargo, Bank of America, and then we have some of your smaller lenders, which is maybe your local credit union or state bank. Those are the ones that are at higher risk of not lending. Now, the bigger ones can have the capital to basically outrun the bad debt, but the small banks don't. So I'm going to start with the small banks. So during the pandemic, a lot of the local state banks and credit unions were trying to keep up with these big lenders. Now remember, these massive lenders were doing all this stuff 100% automated. As long as you had a 650 credit score, no proof of income, no proof of residence, they'd finance you up to 150, 120% of LTV, no big deal. Some were going all the way up to 180%. So a lot of these smaller banks were trying to keep up with the big dogs so this way they can keep the customers and add those loans to their portfolio, because the bigger those grow, the more money they can lend out and the more they can help their community. Well, unfortunately, these types of trades backfired when it came to this type of lending, because I'm sure if you go to a lot of your local state credit unions and banks, right now it's very hard for them to lend. Now, there's a few banks that I'm talking to here locally in the state of Nevada that are absolutely decimated by the auto loan crisis. Now, the way banks work is as they take your deposits in, they basically lend that money out to your community, whether it's a house, a business, or even auto loans or credit cards. And this is how the bank makes money, able to grow and issue out more loans. But, it takes a lot of people to outrun bad debt. So let's just say that you bought a 2023 Dodge Charger for $45,000 over MSRP, which a bunch of these people were. So now you got this beautiful Charger, Hellcat, whatever else that you owe 100 grand on, and you made 5 payments. Now you can't afford it. You run around from the bank, and then they finally get the vehicle. Now today that car is worth probably closer to $50,000. So the bank is going to lose probably over $40,000 of estimated value. So once they take this to the auction and they sell it, they have that $40,000 gap that they have to make up. How are they supposed to do this? Now, everybody knows banks traditionally make money from, charging you $10 on an NSF or simple interest on credit cards or other loans, but you could see how long it would take to get something that much money back from a $40,000 account. Now, times that by hundreds, if not thousands, depending on your local bank, and that's what you're facing with today. Banks are losing thousands of dollars every single time they sell a car at auction. And with those deficiencies, they basically have to take that back to the bank, and now they're basically upside down. They have no way to do it. Now, traditional banks have, billions of dollars, not millions, billions. So they can just throw money at the problem. It's not that big of a deal. I think Wells Fargo pays like $15 billion in fines every year. It's not sweat off their eyebrow. But your local state credit union and bank can't afford these things. So what happens? As the risk and as the repos and everything starts to build up, all the banks start pulling back when it comes to lending, and they only do it for 100% where they believe they can get paybacks. Now, this not only affects the automotive industry, but majority of small businesses. This is why I keep telling people the auto loan crisis is much bigger than the auto industry. So as they lose all this money, let's say the barbershop down the street from you wants to expand, plumber wants to buy maybe a new office so he can expand his operations, they're not going to lend to these people because they have so much risk. They have to have something that's collateralized. So they might do maybe more new home loans. They might do maybe some higher interest credit cards. Or if they actually do approve you, they're going to hit you with such a high interest rate and such high fees that it won't make it feasible, because they're always trying to offset the risk to make sure that they're in a money position where they're going to make money, and they don't have to worry about chasing their money. And so, like I said, this affects everybody. So now you have small businesses all across your community that can't, get the necessary capital to maybe pay payroll, to grow and expand, or to start new businesses. So now your overall community is affected. Now let's talk about the dealerships that actually depend on a lot of state and local credit unions. Now, as a dealer, I sold a majority of my deals to local banks. Now, every time I would submit a deal, basically they would come back with an approval, whatever stipulations, hey, customer has to put more money down, we're going to charge you $1,000 because the customer has okay credit or bad credit, whatever it is. Now we're not getting any of those approvals. They're coming back saying, hey, you know what? I know you want $20,000 for this car. We'll give you a $15,000 loan on it. So now I got to go to the customer and tell them, hey, look, you're going to have to come up with $5,000 more. Customers can't do it. It's too much money and wind up losing the customer and the deal. Bank doesn't get a loan. And so unfortunately what happens is as the banks, they're supposed to get more loans to outrun their bad debt because of all these crazy auto loans they did the last 3 years. But if you don't get new loans to filter this in, their basically bad debt just keeps creeping higher and higher because people are getting delinquent, deficiencies are going up. And like I said, the value of vehicles is dropping dramatically compared to the last 18 months. So now they're in a really hard spot because as everything gets worse on the bad debt side, it makes it much tougher to outlend yourself to basically outrun the bad debt. So where does this put us with? Well, now a lot of these local and state credit unions have to borrow money at a much, much higher interest rate than they traditionally did before. If they're borrowing it, let's say at 3.5% to 5%, they can lend it to you for 8.5% to maybe 15%. But if they got to pay 10% because the portfolio is basically performing extremely bad, they're going to have to get maybe private money or some other investor money, whatever the case may be, to lend out more loans. So this way they can outrun their bad debt. Now you're paying a premium on top of that. Now your average auto loan's going maybe 18 to 19% interest. And so you can see how this will little by little will start to snowball and get out of control. Now, when it comes to big tier banks like Wells Fargo, Bank of America, like I said, they can have the capital to outrun their debt. They're much bigger than just their auto loan portfolio. But at the same point, this does affect them majorly. And this is where the franchise dealerships come in. I'm sure you guys have seen all over the news, and I've said it a bunch of times on this channel, application count around the United States is down dramatically, almost 15%. That means how many people are applying for cars. Now, after that, it's even down even further with rate of approvals. A lot of the finance managers I talk to are literally screaming at the top of their lungs trying to get deals bought, but the banks don't want to buy them. They're charging too much of fees, which if you guys don't know, when I sell a car to a bank, depending on their credit and their job history and whatever else, the bank will actually charge me a fee to accept that loan. Now the fees are getting higher and higher. So if you're trying to sell a $20,000 car and they hit you with a $3,500 fee, there goes all your profit. You're not going to make anything. You might make something on the back end, but nothing on the front end. And so as this starts to play out, it's getting much, much harder. Plus on top of that, they're cutting back LTVs. And I think this is the biggest indicator of how bad the market really is. And this is why it's going to affect pretty much everybody, because if they don't want to finance these overpriced cars, because remember, all new cars are absolutely astronomical. They're not worth anything what they should be. But if you try to go in and they say, okay, we're going to give you 90% of LTV, and this car is, let's say, $100,000, you're going to have to come up with all the sales tax. Let's just say that's 8%. You're going to have to come up with like maybe 10 to 12 grand for taxes and fees. And then on top of that, you have to put another maybe $10 to $15,000 to get to that 90% LTV to get that vehicle. But in the last few years, people were so trained, don't put any money down or put very little money down, keep liquid, don't do this and don't do the deal. So now what's happening? They're getting high interests with high down payments. People don't want that. They've been spoiled these last few years. So what do? They keep their car that they got at 3%, or some of these people 1.9%, and they're just passing on it. Just like the mortgage thing that's going on today. A lot of people are not selling their houses because they want to keep the 3% mortgage. Why get a new house and pay double the price? You'll just keep the same thing. And that's kind of what's happening now. People are walking away from buying new cars. So as we start to go deeper into this crisis, banks don't want to lend, because they can't basically outrun their bad debt. They can't issue new loans at the rates that they want because Americans simply can't afford them because they're completely taxed out with student loans, credit card debt. I mean, everything is at a record high. You can just Google Experian and look up credit card debt, student loan debt, private equity debt, like just all kinds of crazy stuff. Now, the scary thing is a lot of the statistics that I bring you just have to do with traditional lenders because they have to basically convey this information to regular people. What about the non-conventional lenders like payday loan companies, pawn shops, buy here, pay here dealers? This is where the numbers really start to scare me. Now, I'm part of a big buy here, pay here group on Facebook, and a lot of us dealers kind of talk about what's going on. And a lot of my friends that do buy here, pay here, which is basically the dealership being the bank, are literally like, they can't support all the customers. They got more customers than they can handle because the banks are turning everybody down. They're trying to sell like $15,000 cars with $5,000 down, and the banks don't want to finance them, or they want to charge a massive fee. So all these people are looking for capital so they can go out and lend to their people and basically charge them, I hate to say it, 18 to 29% interest. But when there's nothing else to do, this is what happens. This is exactly what happened in 2010, 11, and 12. All the banks basically lost their butt during the bailout of 2008, and everybody freaked out, and then it took us about 5 to 6 years to recover. So all the subprime banks that are currently out there now can't lend because, like I said, they have too much bad paper. When we don't have enough new subprime lenders coming out to make this market competitive, so we're just at a real stalemate. Like nothing is being done. Now, unfortunately, if you're a buyer, this is going to make it very hard for you to get a good deal when it comes to financing. If you can work with your credit union, if you can buy down your rate, whatever you can do, try to do it. Now, the good news is this puts more downward pressure on pricing when it comes to selling your vehicles. Because if you go on Car Gurus and you look at the average days on market for a lot of these cars, it's higher than it was pre-pandemic levels. So that just lets us know that there's more inventory and there's more stuff sitting around because people just simply can't afford it. Now, you can negotiate on the price, get a good deal on the price, and then even if you have to pay a little bit of higher interest, wait it out for about a year or so, and then hopefully you could refinance it once the market readjusts. So that is my advice to you if you're currently car shopping. Now, unfortunately, if you have bad credit or you're buried in another vehicle, you are in really big trouble because banks, one, they don't want to lend to anybody that they see as risk. And if they do, they're going to tax you. I've seen banks issue almost 29% interest on car deals where customers were like 630, 645 because their utilization on their credit card was too high. Traditionally, we would have just gave you a crazy loan at low interest because utilization, we know it goes up and down, but this is how strict they're being. Now, it's even worse if you actually own a car. So if you have a car and it's not paid off, they're so worried that you're upside down in your car. And what you're doing is you're actually trying to buy another car to get out of this old loan. So unless a lot of these dealers are willing to take in your car for trade, write it off, pay it off, and then get you a new car, they don't want to do it because they've been burned so many times because this is exactly what's happening to them. People are going in the dealerships, buying brand new cars, getting a new loan, not paying off their old one, just leaving the keys there and driving away. They got their brand new car. They can kick that can down the road another 3-4 years. And their car that they paid, 140% LTV on, that they owe, almost double than what it's worth, they're just going to leave those cars there. It's almost like the house for keys of 2008. People are just going to start walking away from their cars. Banks are starting to see this, so they're really taxing people on making it through. Now, we've done a lot of different finance things through our little mentorship about how to basically work with banks, but unfortunately, a lot of the banks don't want to do 2 to 3 auto loans. Now, traditionally, most people will have, if you're married, you have kids, whatever else, you may have 2, 3 auto loans. Even like when I went and bought my car, I had to justify 3 different types of auto loans because this is something they're really interested in, and that was back with the crazy loose lending. Today, it might actually be hard for me to go out and get a car, even with a high credit score and paying all my auto loans on time because banks are so worried about the risk. Now, another thing that's actually kind of shocking is what's happening with exotic car financing. I get so many messages of people saying, I can't get nobody to finance me. Why not? Nobody wants to put all their eggs in one basket. If I give you $300,000 on a Lamborghini and you don't pay the insurance, you don't pay the maintenance, and you drive it into a brick wall or you disappear or you sell it on Facebook or Craigslist, they're out $300,000. Now they're diversifying their risk. They'd rather give 100 people a $10,000 car and trust their odds that way instead of giving just one person a really nice car at a low rate. And so you're never going to see exotic car lending start to get harder. Now, I usually use LLP. I'll leave a link in the description below if you're looking for exotic car financing or leasing. But even with them, like I said, they're a great bank, but they have to raise the rates because unfortunately everything costs more money. And when it comes to risk, unless you're putting big money down on an exotic car, don't even waste your time. I get so many people like, bro, I got an 800 credit score. I don't want to put anything down. It's not going to happen. The banks don't want to risk that much money, especially with exotic cars, because you could buy a brand new McLaren for 325 grand. You drive it off the lot. Now it's worth 275. And so they don't want to be upside down any of these things. If you're thinking about buying an exotic or a luxury vehicle, you got to come with a big down payment. I don't care how great your credit is. There's all these little banks and credit unions that will still do 100% LTV financing or 110 or 120. But majority of the banks now don't want to do it because they've seen how much money they're basically losing every time they have to take a repo back to auction and how many people are currently not paying. So hopefully this will give a little bit of information for you guys. If you guys are car shopping, please take your time, be careful, try to get the best deal you physically can. And unfortunately, financing is not going to be cheap. So if you can buy down the car and get it at a cheaper rate, hopefully you can refinance it in a few months from now. So anyways, I'd like to thank you guys so much for watching. Also, if you guys are worried about refinancing cars, I have another video coming out about that. But the long story short, if you owe more on your car than what it's worth, no banks or credit unions are going to refinance it. So that's another down thing. So you want to make sure that if you're in that predicament, pay down your car and move forward. But anyways, thank you guys so much for watching, and we'll see you next video.